Welcome investors. In this video, we are going to cover the fortunes of a mid-cap gem. The company is Aditya Birla Fashions and Retail Limited. This video is brought to you by SmartInvestor. Subscribe to our channel, like and share our videos. Aditya Birla Fashions has been doing very well. The company has seen a rising consumer spend, recovery in discretionary spends, 36% higher expenditure on clothing and footwear between July and August of 21. Storage footfalls rebounded after the relaxation of COVID norms. Relaxed restriction and overall improvement in safety protocols are leading to higher footfalls in retail chains. Omnichannel gaining chain. Players rapidly scaling up their omni-channel coverage, enhancing consumer experience and driving commerce. Physical retail is back. While e-commerce stayed as top priority, business reinitiated network expansion. Aditya Birla Fashions and Retail has India's widest distribution network with 2,917 stores. It has 347 Pantaloons stores, 26,841 multi-brand outlets. The company has 7,094 SIs across departmental stores. Retail footprint of 8.5 million square feet in Q2 of FY22. Omni-enabled stores are more than 30%. The company has various segments. Youth Western wear Forever 21 is a brand of choice amongst Gen Z and millennials. Revenue grew by 1.5x over last year. Expand the presence across new towns and piloted franchisee-led store. American Eagle Outfitters is another brand. Industry-leading LTL of 25% in this segment. Revenue doubled over pre-COVID levels and EBITDA profit. To expand aggressively across all the channels, already becoming the favorite brand at DS and marketplaces. The company is positioning itself amongst the top denim brands. In the super premium brands, revenue grew more than 60% over pre-COVID levels. The company achieved highest ever EBITDA in second quarter of FY22. All constituent brands in the portfolio now EBITDA positive. The collective routine well on track to become India's leading luxury omni-channel retailer. Company is building collective portfolio through new brands and categories, aiming to position itself as a premium one-stop destination for women's apparel and accessories. The brands of the company are given below. Van Heusen is an active athleisure innerwear. Continued to build its strong momentum during the year. Revenue in this segment grew by 41% over last year, 46% higher than pre-COVID levels. Women's segment continues to be a growth pillar, up 55% over last year. The company has aggressive expansion of distribution network, added 1,300 plus MBOs, present now in more than 23,000 plus. Exit the quarter with 54 MBOs, on track to exit 100 EBOs by year end. The company has strong growth in e-commerce, 71% above last year, aided by aggressive digital marketing and assortment expansion. Company is into ethnic wear, where the revenues grew more than 50% over the last year. Women's and jewelry category showed the highest growth. Expanded product offerings include home, jewelry, piloted kidswear and personal care products. Revenue has gone 3 times of last year and the outlook is very bright. Assortment expansion is planned. Distribution expansion via new formats is planned. As we all know that Pantaloons retail showrooms are having a brand value with a good patronage by the customers. Revenue grew by 80% to reach 665 crores. Sales recovered more than 73% of pre-COVID level by higher consumer sentiment, strong traction during ongoing festival season. Stringent cost control has helped the company to increase the EBITDA 86% versus previous quarter. Margin expansion of 300 bps for second quarter of 22. Launched new labels in premium athleisure and premium ethnic fashion wear. The company continued to focus on store expansion and rollout of new retail identity. Launched 7 new stores in Q2, 40 plus stores to be launched in second half. Relaunched 6 iconic stores with new brand retail identity. The company sustained growth in e-commerce channel. Pantaloons.com continues to build compelling proposition with its customers. Omni-channel sales grew 2 times last year. Strong traction on marketplaces. Expanded omni-channel to third-party players. The retail network of Aditya Birla Fashion and Retail Q2 FY21 was 4,366 compared to Q2 FY22 is 4,497. The number of stores in quarter 2 of FY21 was 339 and in Q2 FY22 the number has increased to 347. The company has posted spectacular results as shown in this picture. Channel wise revenue, wholesale, retail and others, the highest in Q2. H1 channel wise revenue, wholesale, retail and others, FY22 325, retail 698, others 569. The retail network of the company, the first Q2 of FY21 was 2853 square feet. Compared to that, it has increased to 3492,000 square feet in Q2 of FY22. The number of stores has gone up from 2247 to 2754. The brands of the company are given in this picture: Louis Philippi, Van Heusen, Allen Solly, Peter England. It has shown the loyalty base of 257 lakhs. Excellent sales recovery, revenue 92% of pre-COVID levels, grew by 2.2 times from last year to 1,156 crores. EBITDA at 86% of pre-COVID levels, 188 crores versus 39 crores last year. The company has launched expanding casual wear portfolio, growing Allen Solly Tribe, LP Athleisure and Active. Launched a premium casual wear called Louis. Launched Denim Labs from Van Heusen. The company has launched new segment extensions, an important growth lever. Strong performance in women's wear across brands. The portfolio grew by 2.5% and has leaped by 2.5 times last year. Launch of Peter England kits for 5 to 15 age group for both boys and girls is a new development of the company. Expansion across market, especially small towns. PE Red Cross 350 plus stores milestone, as expanding AS Prime, now selling across 30 stores. So this is about the Q2 highlights of the company. The category mix: men, women, women's ethnic, kids and non-apps, shown on the Q2 of FY22. Ownership mix: own brands, MFL, others, Q2 FY21 and Q2 FY22. The scrip performance has been spectacular. In the last 1 year, the scrip has given a return of 80.55%. the company shares were trading around 150 levels and has crossed 325. Company had a year high of 312 and a low of 148, currently trading around 300 levels. The 6 months performance indicates the scrip has given 37.42% returns to the investors. The 1 month return shows 12% returns from 270 levels to 307. Long-term investors should buy the scrip around 300 levels as we expect the company to expand quickly. The biggest risk factor for this company is the return of COVID. The third wave of COVID has invited a lot of governments to impose strict restrictions. Lockdown may not be there all across India, but selectively the governments are having containment zones. This is a risk factor for retail growth. On all other parameters, the company is doing exceedingly well, and with the reduced impact of COVID, we expect there will be larger footfall in all retail industry. Investors can wait for Q3 results and then start buying on SIP basis. Thank you.